Hi, thanks for joining me again. I thought we'd have a look at the ASX Metals and Mining sector this week. It accelerated away to new highs in the previous week, and I just wondered if we might have a look at that and see if we can understand what caused the rise, what's in the background, or if we could have predicted the rise and taken part in the rally. You can see that price has generally been in an uptrend for quite some time, and if I zoom in a little bit, this was when COVID first started, the coronavirus issues. You had previous highs over here, and it was more than likely that price was going to push away to new highs here, but the COVID issue started. There was a little bit of uncertainty originally in this position, and then price started accelerating lower. Now, this little juncture here is the first thing that I'm interested in, where there was two closes pretty close together, and then price accelerated lower on a sharp increase in volume, and price closed well off its low for the week. Now, I always feel like when price accelerates lower on above average or an increase in volume like this and an increase in spread, it traps people into their positions. They're left in a losing position or a weak position. That means if they went to go and sell now, they would have to take a loss. So anyone who bought above this level right across here is effectively in a losing or a weak position when price started accelerating lower on this bar. So I take a note of these little junctures like this, because it says to me that when price gets back above this level, all the weakness that developed to put all these people under pressure, all these people here under pressure, when price gets back above this level, all the weakness has been left behind, and price has a much easier time moving forward again. So I take note of these levels. And you can see that there was very high volume on this bar, but the close was mid-bar, or almost back at mid-bar. So there was certainly some pretty heavy buying in there. And then the next bar, on almost the same volume, the spread had narrowed considerably in response. It only lost a little bit of ground overall, and the following bar was up and still pretty high volume. You can be almost guaranteed that on these three bars here, there was considerable buying in the market, and that's these three volume spikes. Considerable buying. There's no doubt about it, or very little. And then when you see price then trade in very logical manner, where price goes up to where you would expect the critical level to be, it comes back and consolidates for a period, 3 bars, and then it accelerates back out. That price action is very logical, makes good sense, and when price action makes good sense, that's when you want to follow it. Now, over here at the previous highs, this bar here, and possibly this bar here, had quite high volumes. If we mark the high of that bar and the low of that bar, you can see that previously price was probably going to attempt to break out. But the COVID issue came in. There was some uncertainty for a little while as to what was going to happen. and then price accelerated lower as the COVID issue became worse. You can also see now that as price accelerated from where we were up to previously, it closed back at the lows of that range, of the higher volume range. Then it comes back and consolidates for 3 bars, very similar to what it did over here. And then it accelerates out again in exactly the same fashion. This was price absorbing its way through this old high volume zone. And as price is going to come up and make new highs, it inevitably has to consolidate first. You can see that it's come back, and if you look down here, volume was fairly modest, so that's okay. It looks okay at that point. But then as price tries to push away, this bar on an increase in volume turns up, close is off its high. That's supplies come in for whatever reason. I haven't been back to check the news, but supply came in, and you can see that in response, price moved lower. Now, if I just quickly clear that off, I pointed out this little juncture over here before. You've got another one just there. It's a smaller one, but we're looking for a little juncture where price moves below the previous bar's low on an increase or above average volume. And you have it there. So same as before, if we mark that level, that's a level we want to take note of. Now price comes back for 2 bars in response to the high volume here. Here's the high volume. And you note on the second bar, spread narrows. The volume is lower, so supply or selling pressure has reduced. And then the next bar is up in response. So it appears that whatever selling pressure emerged over here has eased or been removed for whatever reason. When price moved higher, it's a little bit concerning at the time, or it would have been, that price didn't come up and touch that little breakdown line, similar to what it did back over here. You see price came up and easily touched the line. It took a few days, but it touched the line before it started to consolidate. So there was a little bit of weakness in the market. You see that there was a couple of low volume days with narrow spreads, and then prices come back. It's tested those previous lows for strength. And you've got another one of those little junctures that I've mentioned just there, where prices accelerated lower with an increased spread on above average or increased volume. And there's the volume down there. Whoops. There. So if we just put a little mark across there. Now, could we have foreseen this sharp rise in price? When this bar came in, it would have been a little concerning. We've marked that level as an interesting level to watch, as had that level. Now, you can see that volumes increased considerably. Price initially went higher and above this line, but then it's drifted lower during the week and closed down near its low for the week. Now, at the time, you had been unsure. It looked like selling pressure had come in, and you'd perhaps expect the market to head lower. But you'll then notice at the next bar, it didn't go lower at all. In fact, it closed slightly higher. Let's have a look at it more closely. Here's the bar that closed poorly, and the next bar actually closed higher as an up bar. And here was the first volume. It was still fairly good volume. In a previous video, I said sometimes you need to look at what didn't happen. And what didn't happen in this case was price didn't respond lower when this bar looked like it was vulnerable, looked like it was threatening the market, that it was going to go lower. In fact, it went higher and still pretty handy volume. So you'd have to consider that this bar wasn't actually weak at all. This bar was absorbing supply as it tried to go through this level, which we'd marked, and if price can get back above it, we're saying that it would leave all the weakness behind. This is a little complex level because you've also got this one here that we'll look at in a sec, but price had moved up on both these two bars and it was absorbing supply, and I noted in my weekly ASX analysis that this bar was suggesting that price was actually strong and not weak. And as soon as you saw this bar developing during the week, this one, especially when it had gone past this bar's high, or when on the first day or so you didn't see any weakness emerge in response to either of these two bars, you could have easily had a look at which stocks in this sector had a similar setup to this, because the price was strong, not weak. It might have looked weak, and conventional analysis might have suggested it was weak. But when this bar didn't move lower and volume was still quite good, you had to consider that the market was actually in a stronger position, not a weaker position. And it was absorbing supply through this level. And then when price the following week pushed through the next important level that we had marked, it had left all the potential weakness behind. And it was, apart from a small amount of supply that might have been locked in here, I suggest to you that a reasonable amount of the potential supply that was resting here, people who were looking to sell for whatever reason, probably sold during this period in here, and that supply wasn't sitting here anymore. And that was probably shown in the last week when only a modest increase in volume. Look at the increase in spread as price accelerated past these previous highs and closed easily above it. There was pretty much no doubt on this bar here, the market was masquerading as a weak market, but what it was actually doing was absorbing supply in preparation for a strong push higher. And when price moved above this high, or showed you strength in the market on the daily chart, or moved above this next level, you certainly could have caught the bus, and you'd still probably be in your trade now, unless you were day trading. And if you did take that trade and you continued to hold it and look to swing it higher, I imagine it will continue higher for some time yet. I note that today the market is up over 1%, and I expect that the momentum will continue for a little while yet, and then perhaps you'll see price come back and test the previous highs for strength before continuing higher a second time. I may continue doing this type of individual analysis for a period now, where we look at a chart and try to understand the price movements and whether we could have taken part in any sort of rally or avoided any sort of fall. Okay, that's my lot for now. Thank you. See ya.